Well, State Bank of India announced a strong set of Q3 FY22 numbers, especially on the NPA front. When we look at how NPAs have shaped up for the bank, well, it was at 5.4% at Q3 of FY21 and 4.9% at the end of Q2 of FY22, wherein within this period we see a 50 basis point improvement in 3 quarters on the gross NPA side. However, in the current quarter, that's come down to 4.5%, a 40 basis point decline in just a single quarter in Q3 of FY22. A strong set of improvement in terms of gross NPAs. When we look at net NPAs as well, a very similar trajectory, right? It was at 1.8% at the end of Q3 of FY21, and that's come down to around 1.52% at the end of Q2 of FY22 and down to 1.34% at the end of Q3 of FY22. So a 30-point gap closed in over a span of 3 months, after which there has been a 18 basis point gap covered up in just a single month. So the NPAs have seen a good solid reduction. And when we look at how brokerages are assessing State Bank of India, right? Well, brokerages are of the view that SBI is a strong buy. We did mention that even prior to the results, that 50 out of the 51 brokerages that we have access to have a buy rating on on State Bank of India. Well, JP Morgan continues to maintain an overweight rating on SBI with a target price of 650 rupees a share, as they believe asset quality continues to surprise on the up, which is positively. They also feel that there has been a good print on both loan growth as well as margins. Mind you, SBI's loan growth this time has been quite strong. When we look at the loan growth number, it sits pretty at around an 8.5% year-on-year growth in loans, a 5.3% sequential uptick in gross advances. So a strong set of number there as well, and JP Morgan very correctly points out to that. And of course, there's been a margin improvement as well. Moving quickly on to CLSA. CLSA also continues to maintain a buy on SBI with a target price of 750 rupees a share and believes that it's the top pick in the banking sector in India. It now expects SBI to clock a 1% ROA and a 16% ROE going forward. It believes that SBI is clearly undershooting in this credit cycle. Moving quickly on to Jefferies. Well, Jefferies also has a buy rating, 650 rupees is the target price, and it believes, however, that results have come in below estimates largely due to 2 reasons. One is your lower fee income has come in this quarter, and second is higher provisions than what they had anticipated. However, they believe the key positive is the low net slippages. The higher CASA as well as corporate book should aid top line is what Jefferies believes. Moving quickly on to DAM Capital. Well, they maintain an outperform on SBI with a target price of 622 rupees a share. They believe that SBI is seeing benefits from benign asset quality cycle, which is what has been the highlight pretty much across brokerages this time around. Even Antique on SBI has a 640 rupees per share target price and sees strong gains on asset quality, and growth is going to be a key lever for the stock is what they believe. Broadly, pretty much a consensus buy for SBI.